Yesterday, news broke that U.S. President Donald Trump has recently levied a 14% tax on Nigeria, primarily in retaliation for the country's import ban on 25 different product categories that affected U.S. exporters. Now, the prohibition had a detrimental effect on the U.S. trade balance in Nigeria, according to the Office of the United States Trade Representative, especially in the area of consumer goods, drinks, pharmaceuticals, and agriculture. Now, this comes right after Trump declared that a 104% tariff on China's goods will take effect today in response to China's 34% import tax on American goods. The global focus on tariffs and trade places urgent emphasis on Africa's improving its trade dynamics within the continent. Now, a new article in the Southern African Times argues that South Africa should step up more to become the principal sponsor of intra-Africa trade and investment via a strategic reconfiguration. The author of the article, Farai Muvuti, CEO of the Southern African Times, joins us now from the UK to discuss this further. Good morning to you, Farai. Many thanks for joining us on the Global Business Report this morning.
Thank you so much for having me.
Most welcome. Well, let's begin with what you make of the 30% tariff from the US has imposed on South Africa and how this could possibly impact its economy.
Well, of course, I think the inflection points are going to be quite dire for the short term, in the sense that the markets will respond negatively towards the South African market. So there will be a slump in terms of investment. So the rand, of course, has been impacted. However, what I do see as a long-term strategy here is the diversification approach to that, of course, policymakers in South Africa are looking at. However, we need a much more intrinsic and much more strategic approach to that, which I discussed in my article, where I think there needs to be an approach to looking at intra-Africa developmental trade that enables a sustainable and much more long-term approach that equally matches the particular sophistication of the current global dynamics as it pertains to Trump's geopolitical nexus points, which of course have impacted the South African economy. So we need a much more strategic approach that looks at the long term in a much more sustainable fashion.
Right, certainly. I mean, strategy is always certainly quite important. But can South Africa afford to be more aggressive like China, or is diplomacy with the US the way forward?
I think the approach of China in that particular mold of, let's say, the aggressiveness, I don't think South Africa should look at it that way. We have to look at a very unique approach. But equally, South Africa cannot be passive in its diplomacy, because it equally encourages the asymmetric approach that we're seeing. What South Africa perhaps needs to do is to be strategic by striking a balance between continuing its engagement with the US by virtue of trying to ensure that the diplomatic angle is actually approached with a very sober headed mindset, especially when it comes to dealing with its engagement and how its industries are still interconnected with a lot of the global north. But as it does so, it equally has to look within. Africa trade, for instance, last year, according to the Africa Development Bank, has stood at 18% when it comes to intra-trading levels. South Africa has a strong opportunity here to enhance that. And South African businesses equally can actually dive into this, given the fact that they have a strong logistical backbone. They equally have good financial markets, and equally can inherently, by leveraging and pivoting the Southern African development region as a point of developing a broader concept in as far as its developmental stages. So I think that there's an opportunity to diversify that particular trade further.
So still treading along that line of strategy, very strategically as well. Well, your article, Farai, talks about South Africa stepping up to be the principal sponsor of intra-Africa trade. But African countries don't even have that many ports. Isn't low intra-Africa trade an infrastructure issue?
Well, it's definitely an infrastructure issue. We certainly have infrastructural challenges, but I don't think that those infrastructural challenges should be seen as a reason for inaction. I think that there's an opportunity, in as much as we have very limited ports in terms of the infrastructure perspective, but we equally have the opportunity to do rail. The interconnectedness of Africa post-coloniality is that we have limitation of rail access points. Equally, we have limitation of data access points, data sovereignty, and so forth. So fiber optics, for example, is a great avenue for us to create more interconnection. So in as much as infrastructure is a challenge, I think South Africa has an opportunity here to further pivot its logistical industry, which is quite robust, to further enhance the potential prosperity that can be further gained as a result of the opportunities that they create.
All right, very well put. Well, you've also highlighted that South Africa's role in the digital economy must be amplified. South Africa is already the most industrialized country on the African continent. How much more tech amplification can we promote?
Well, I think one must see amplification as not just a limitation to greater enhancements. I think amplification also means transformation. So your strategy can be very linear. South Africa has been very insular in its approach to trade for the most part when it comes to intra-Africa trade. So what we need to see is amplification of that particular aspect of infrastructural rollout. So a transformative approach would require them to equally study the ecosystem within Africa by looking at, for example, special economic zones. Fortunately, yesterday, I had the pleasure of sitting down with the CEO of the Lagos Economic Zone area. And part of the lessons I think that we've learned there, if you look at the Lekki port, for example, that has demonstrated that easing of doing business does generate a lot of business, more business, and equally more opportunities by virtue of attracting a number of investment partners. So South Africa can actually take a leaf out of that by creating special economic zones, creating much more financial distribution through sovereign funds and wealth funds and so forth, and a mixture between state and private equity that can create much more infrastructural rollout. So I think the opportunity is not to see their own infrastructure as a limitation by virtue of how much they've expanded, but to further transform that for greater distribution and greater equity to introduce the SME markets, whereby more African SMEs that are growing in terms of fintech can actually absorb some of these opportunities, so we can grow the pie as well.
Oh, certainly. Well, let's look at funding and soft infrastructure. I mean, capital, as they say, is a jealous bride. South Africa faces competition for capital from its southern African neighbors, as well as out eastern Kenya. Then you have western Nigeria, and then north in Egypt. Is this competition good for the continent?
I think competition is healthy. Competition should be welcomed. And competition equally enables the continent to look strategically at its capacity in terms of how it enhances its capacities with regards to governance processes, and equally the aspects of how best we can enhance productivity. Now, but competition should not be seen as something to despise. I think competition should also be seen as an opportunity to collaborate. African economies have been moving in silos for many years. It does not make sense that Nigeria attracts investment to Africa solo. It does not make sense that South Africa attracts investment solo. When we have a much more collaborative approach by leveraging the Africa free trade and a booming market potential with over 1.4 billion people on the continent, I think there's a possibility here that collaboration led by an anchor like an anchored economy such as South Africa will create greater prosperity. So competition is welcomed, but also let's think about collaboration.
Now, collaboration is always certainly key, but then also we have to be, realistic and also look at wider infrastructural challenges, which has pretty much been the bane of existence for Africa for quite a bit. It is estimated that about 600 million Africans face electricity shortages, for instance. Now, this undoubtedly impacts productivity and exports. I mentioned ports earlier. Is electricity shortage not the biggest hurdle facing development in Africa currently, or are we possibly overlooking other potentially bigger sore points?
Definitely. Energy is a critical problem for the African market. However, that being a challenge, like I said earlier, it should not mean that inaction we shouldn't sit and wait for the issue to be resolved by other people. What we need to look at is how do we leverage our economies to ensure that infrastructural development can be created, especially within the context of energy. So collaboration is equally important. The Africa Free Trade gives us that opportunity by pivoting big economies such as Nigeria and South Africa playing a lead role in this particular instance, given the fact that Eskom has quite wide-ranging facilities and services that can actually cater to the continent by virtue of experience. But what we can also look at, by the way, is alternative energy. How can we collaborate? China is currently the largest trading partner for the African continent. How do we pivot as a collective that particular relationship? But more importantly, how do we pivot our own private equity finances by a mixture of not only sovereign funds from government, but equally our private businesses working collectively to ensure that we meet this energy gap? The problem we've had over the years is that we have looked at energy problems and energy solutions from a silo perspective. Yet again, I encourage, if we collaborate, when big economies collaborate, especially if you look at the big work that's happening in Egypt, if you look at the current rollout project done in Tanzania, all of these things may contribute to a broader mechanization that actually closes the gap of our energy issues when it comes to Africa.
All right, and let's juxtapose this against the job market reality. South Africa has one of the highest unemployment rates in Africa as we speak. Now, many might wonder that if you can't create jobs to boost productivity and exports, how can you become the principal sponsor of intra-Africa trade? Is there a mutual exclusivity between the two here?
Well, I think you have to think of it in a different way. The fact that South Africa has such a high level of unemployment amongst its youth population, especially within its job market, one has to look at it as an opportunity. We have to, and part of that is to not think regionally. South Africa's greatest advantage is its capacity, by virtue of having a strong financial market, a strong logistical market, and a strong mining background, from which it can pivot to actually enter new markets. So thinking through the region actually enables us to create greater employment. And a great example of that is what the EU has been able to do by looking at human capital as not just, from a perspective of borders and tariffs, lessening borders, lessening tariffs, lessening accessibility to great talent by virtue of a cross-pollination between policy configuration of the Africa Free Trade by virtue of ratification of these particular policies, and an implementation strategy that looks at creating greater employment by industrialization, looking at industrialization, for example, as purely a foundation to create critical economies of scale. I think when we think that way, from a regional and continental interconnectivity perspective, we can then actually close that particular gap within our job markets.
And certainly a very optimistic outlook there, and a great way to wrap up this conversation. Many thanks, Farai, for joining us this morning on the Global Business Report. We'll see you again very soon.